Hey folks, this is Office Hours with Desiree and Malcolm. This show is intended to peel back the curtain on the home mortgage industry and make the whole process more approachable and more accessible to everyone. Desiree Regusci currently serves as the Business Development Manager for Fortis Mortgage, and among other things, she is responsible for educating current and future clients on the ways in which the right mortgage can help make their home ownership dreams into a reality. Malcolm Ethridge recently began working with the team at Fortis Mortgage as a strategic consultant, where he lends his expertise and perspective as a certified financial planner in helping homeowners with unique and complex borrowing needs understand and navigate the mortgage landscape. In each episode, the pair will discuss a particular mortgage topic, share real-world examples, and give you the perspective of the lender, underwriter, and loan originator. So with that, Desiree, Malcolm, take it away.
Hey folks, thanks for joining us. I'm Malcolm Ethridge, that's Desiree Regusci, and this is Office Hours. On this episode, we're talking about whether it's possible to qualify for a new mortgage as a retiree. When a person retires, we often think of them as no longer having any income, which means they would no longer be able to prove to a bank that they can pay back a loan as far as the lender's concerned. And conventional wisdom tells us that if a person doesn't have a job, there's no way they can pay back the loan. And thus, again, no bank would be willing to offer them financing. But as Desiree is here to tell us, that may not always be the case. So Desiree, let's start there with that. Is that the rule of thumb, or are there exceptions to that rule? As a retiree, as a person who doesn't have income in general, that you're always excluded from being able to acquire a new loan?
So the short answer is that yes, a retiree can qualify for either a refinance or a new purchase.
Mm-hmm.
And we can talk a little bit more about that and how we structure it and work that here in a second.
So just to clarify too, when I say a new loan, does that mean that they can purchase a new property and refinance, or does that mean one or the other?
I mean, if whatever income they're going to be having coming into their bank account during that time, so let's just say Social Security, for instance,
Mm-hmm.
if it supports that primary mortgage that they're going to be refinancing and an additional, like say a secondary home, then absolutely they're still able to do that, but the income still has to be there.
Well, let's dig into that one a little bit more. You bring up income, which is obviously the most important part of this equation. Well,
right.
Maybe next to credit score, you'll tell me which is more important, but income is definitely going to be an important component in this equation, right? So let's stay there for a second. As far as income is concerned, are there any types of income? You mentioned Social Security, for example, which is pretty consistent, is pretty reliable, is pretty easy to plan around, I guess, from an underwriter's perspective. But are there any other types of income that a lender prefers to see when looking at a loan?
Honestly, I don't know if it's like a preferred, but again, you can have Social Security, you can have a pension.
Mm-hmm.
There might be other opportunities to be pulling out of your, like an IRA, for instance. And really, it's just about being able to document consistent, steady income going into your accounts.
Okay, so I have savings in my bank account. I have savings in my 401k or IRA or some other type of retirement account. You're saying I could be drawing down those assets if necessary to prove resources to make the loan. I don't necessarily have to deplete my savings altogether and write a check to buy the property cash. Is that safe to say?
That's safe to say, yes.
So we'll come back to that one in a second when we start to talk about success stories. But are there any special loan programs for retirees, or do they just fit into the same regular loan types they would if they had a traditional income source?
Yeah, I think they're going to be able to qualify for, anything else out there, whether it's a conventional or a government loan. It's all about being able to document how this retiree is going to be able to afford the mortgage. That's the most important part. Now you could go, and I know we talked about this in a previous podcast, but talking about non-traditional mortgages, there may be some other options out there for a retiree that can also easily qualify, just depending on what the setup is going to be for them, long-term.
Interesting. Okay.
Yeah.
So let's talk about setting the stage, right? We often talk about planning these things in advance and not just kind of having the knee-jerk reaction when we get there, or the ready, fire, aim strategy, right? What are some steps a retired borrower can take in advance of applying for a loan to help make the lender more comfortable saying yes?
Yeah, that's a great point. So again, planning, right? What and how and what type of income are you going to be receiving as a retiree? So again, we'll just use, say, your Social Security. If it's going to be Social Security, making sure that you have the documentation for that. So whether that's the Social Security statement, again, showing how much that's going to be, when that is going to get deposited. And then I think a good rule of thumb is having at least 1 month's deposit of however that stream of income is going to be coming in documented in your bank account first before you go to apply. It does help, because some lenders may want to see it actually have that first deposit in the bank account. It just makes it easier. And then if you are going to be receiving that income, say through a spousal Social Security, then they're also going to want to see that that's going to continue for at least 3 years.
Okay. So is that like a letter from the Social Security Administration that is showing that you're, going to receive it for the rest of your life or something? How do you even
usually whether it's Social Security or pension, or it'll show the schedule, right? And it'll show how long that is set to continue for. So it should be on that schedule or statement.
Yeah. So interestingly enough, you mentioned the whole 1 month scenario. And I have had some experience with that sort of recently with a couple of financial planning clients where they were retired. They decided to buy a second property in both cases. And the underwriter was wanting to see proof that, well, for one, they were requiring them to actually distribute income from their IRA assets, which I thought was a little bit, unique. But then I found out, no, that's kind of commonplace. Where, even if they don't necessarily need the income on paper, they're not living off of their retirement assets. They've got enough between Social Security and pension money to not need to tap into their retirement accounts. They wanted to see where they had been distributing funds from their IRA in order to be able to prove all the way that they could afford the new mortgage. And the way that we got to that was we were required to have the IRA distribution happen for at least a month, like you just said.
Yeah.
And then have a statement from that bank statement from where the funds landed to prove once again that the income was coming out of those accounts. So really unique circumstances. I learned a lot going through it the first time, and then was a little more prepared for it the second time. But I thought that was I thought it was great that we could even get to a yes, because I assumed the answer was going to be no. Which is the reason I always ask and don't just say this isn't going to work, let's move on. I'm always willing to just say, let me ask some people I know, like Desiree, for example, see what we can do. And if it works, it works. And if not, then we'll go to plan B. But do you have any similar success stories that you can think of where maybe you worked with a client who was retired or unemployed for other reasons and didn't think that they'd be able to purchase or refinance because of lack of formal or traditional income, but then they were able to actually get into a new loan for a purchase or a refi?
Yeah. So kind of have, I guess, 2 examples. One is for a purchase. So about the same storyline you just gave, right? About pulling from the IRA. Very similar circumstance. I think a lot of retirees, they retire, lifestyle changes, and a lot end up wanting to downsize, right? Whether that's to just a smaller home or maybe a condo where there's less upkeep, things of that nature. So same setup. They had cash and they had cash on hand. They didn't necessarily want to use all of it to go out and just use on the purchase, but we were able to establish a schedule based on pulling money out of that IRA, so that we could showcase that they would have that money. It was set up for a certain amount of time. They had reserves in the bank, and it worked out great for them. They were able to sell the property that they were in and downsize into a smaller condominium complex. And then the second one is thinking about, obviously with refinance market right now, the rates are obviously at historic lows. And when you mention maybe a non-traditional income, this particular client was I wouldn't say full retired. They weren't pulling Social Security or pension or anything like that, but they were starting to just work less. So they had taken a job where they were a 1099 employee and working less hours in the week, kind of getting ready for retirement. So one of the things I just want to point out, typically most lenders, if you are a 1099 employee and say you were full-time and then you went to a different model, most lenders are going to want to see at least 12 months of being a 1099 employee, right? Because there's no guarantee when you're structured that way. You could be a temporary, a part-time employee, things of that nature, where they want to make sure that they can just see that, okay, this at least steady, there's some, this is going to continue. So just for that reason, I bring up this example is she was sort of like in a semi-retirement. We had to make sure we had that documentation in order for her to even just refinance. So something for people who are thinking about retiring, thinking about making some changes to their current home, just make sure, again, probably just best to run by whatever your situation is. Are things going to change in the next 6 to 12 months? Run that by a mortgage professional. Make sure you guys are just setting yourself up for success and make sure you have everything documented that you need to.
Sounds good. All good points.
Yeah.
And that's going to do it for this episode. Thank you, ladies and gentlemen, for joining us for another episode of Office Hours. I'm Malcolm Ethridge. She's Desiree Regusci. And Desiree, remind people where they can find you if they have questions after this goes live or just want to get more information from you.
Absolutely. So Desiree Regusci on LinkedIn. I have where you can just find Fortis Mortgage. So at Fortis Mortgage on Facebook and Instagram, and then Desiree at fortismortgage.com is my email.